The British Chancellor is facing pressure to close a fiscal gap against a backdrop of weak growth, elevated public spending, and unexpected productivity downgrade. With income tax rises effectively off the table, attention is shifting to smaller, less visible measures, from stealth taxes to pension and property-related tweaks. Markets are on edge, and with gilt yields elevated and sterling under pressure, budget credibility will be key. I'm Johanna Bota, and to break down the tough path ahead for the UK, I'm joined by Fiona Cincotta, Senior Market Analyst at StoneX. Good morning, Fiona.
Morning.
So, big week for us in the UK. How are markets likely to react if the Chancellor leans on these smaller, more indirect measures rather than a clear, comprehensive fiscal strategy? What signals would indicate confidence or concern in gilt and sterling?
Yeah, so I think, it's been interesting because there's been quite a lot of rumors, speculation, as we've been sort of heading towards the November 26th date. And I think what has been interesting is when we actually saw the Chancellor step away from the idea of an increase in the income tax, we did see gilt yields rise and the pound drop. And I think that's really reflective of this sense that the markets would actually prefer to have a clear, simple move by the Chancellor rather than this sort of tinkering around the edges. Because if we think about the size of the gap that needs to be filled and the buffer that she needs to create, that's quite a lot of tinkering around the edges that needs to be done. I think the concern there would be that, maybe it's just not going to be enough. And then, come next year, we'll be back into a similar position where the Chancellor will be looking to raise taxes again further. So, as far as the markets would prefer, I think they would definitely prefer that cleaner, more simple strategy. But I think what will actually happen is it does look like the Chancellor, Rachel Reeves, will look to go for the tinkering around the edges. Just because in addition to the bond market, she does also need to appease her political party and not go against the manifesto pledges. But I think she also needs to be seen to be moving things forward as far as standard of living is concerned. So she's actually got quite a big trilemma on her hands. And I think, as far as what the market will be looking for, it will be a sense that she has got this sort of 30 billion roughly gap under control. They're going to want to see a decent buffer and a sense of fiscal credibility in order for there to be a sense of the bond market remaining happy.
So then, with gilt yields already elevated and the pound under pressure, what are the key market indicators that you'll be watching on budget day to assess credibility and risk sentiment?
So I think, credibility and risk sentiment is going to be firmly focused on what's going on in the bond market and in sterling. I mean, we only need to sort of, look back and think about the Liz Truss saga as to what happened. As soon as you get a sense that, the market is not happy with what's going on in the budget, what's being expressed, then we can see, almost immediate reactions. Let's not forget on that day of Liz Truss, we saw sterling drop down to a record low. I think it was down at around 103 against the US dollar. We saw gilt yield spike. So, those are going to be the indicators that I'm going to be watching most closely. Obviously, we could also see reactions in stocks. FTSE 250 is the more domestically focused index. So that's the one where we're going to see potentially a move lower if the markets aren't happy with what's going on. Then you've got the FTSE 100 index, but that's made up of mainly multinationals. So that does tend to be a little bit more focused on what's going on in the pound, and a weaker pound could actually be a beneficial for the FTSE 100 multinationals as it brings a more favorable exchange rate.
So, Fiona, just so you know, my mortgage is still suffering from that Liz Truss decision. So one last thing before we let you go. Which sectors do you think are most vulnerable to a negative market reaction, and which might benefit if investors feel that the budget fails to meaningfully address the UK's fiscal and growth challenges?
So I think, as I mentioned there, the ones that could benefit are the multinationals. That's because if we see the pound fall sharply, that is going to bring a more favourable exchange rate to the multinationals. on the FTSE 100. As far as negative impact sectors to be watching, I'd be watching the banking sector quite closely, especially because there are sort of rumors that there may be a special sort of tax on banking profits in a similar way that we had seen previously on oil majors. Similar idea on the banking sector. That's something to be watching out for, which could hit that sector quite hard. I think discretionary stocks, they're going to be ones to be watching, think of retailers, think of sort of, JD Sports, Greggs. They could come under pressure if there's a sense that these tax increases are going to be negatively affecting households and their disposable incomes. And then we've got the house builders. This is going to be one to watch because there's this sort of idea of this mansion tax. Now, it depends if this comes about and how it's put in place, whether we still have a stamp duty as well. Because if we still have stamp duty and the mansion tax on top of that, that could really slow down the housing market quite considerably, which would have a negative impact on house builders. However, if we do see that the Chancellor decides to remove stamp duty and just implement mansion tax instead that's paid over the course of months or years, that could actually bring some movement to the housing market, which may actually end up being more beneficial to house builders, and we could see a positive response to house builders under that under those circumstances. They're the ones I'm going to be mainly watching. I think they're the ones that the sectors that could have the biggest impact to these taxes.
Well, Fiona, we'll just have to wait and see. As always, some really great insight. Thank you so much. And thank you to our viewers for watching. For more financial content, don't forget to like and subscribe to our channel.